Welcome to this week's special presentation, this week titled Combining Earnings Growth and Dividend Strategies. My name is Todd Shaffer, Manager of Research for VectorVest, and I'll be your presenter. Combining earnings growth and dividend strategies is a powerful approach for investors seeking both capital appreciation and income. By investing in companies with strong earnings growth potential, investors can benefit from stock price appreciation over time. Simultaneously, selecting companies that pay dividends offers a steady stream of income, providing stability and potential reinvestment opportunities to further fuel portfolio growth. In successful investing, we focus on buying stocks with solid fundamentals that have persistently rising price and earnings patterns. Our focus is on stock price performance, so we consider any dividend income derived as icing on the cake. In our coursework, we illustrate how an income investor could easily tweak our approach to change the focus of the system to income. Tonight I want to share these concepts and techniques with you too. Our process begins with market timing. We use the green light buyer signal. Let's move into the program. So as you can see from the home page, with a strong sell-off on the markets yesterday and some weakness developing in the color guard, this is not the time to be buying stocks. Primary wave down with the underlying trend up, and the MTI in retreat. And this is a great real-world example. We like to buy rising stocks in rising markets, and when the market's not rising, we're not buying. But we still have an opportunity to learn and prepare for the next rise in the market. So step 2 in our process, if we do have a market that's rising, if we did have our green light in the price column, is to find stocks with solid fundamentals that have persistently rising price and earnings patterns. Top VST stocks in the stock viewer or in the Midas Touch watch list is the easiest place to find these guys. So if you simply click on viewers and click on the stock viewer is simply a giant spreadsheet of all 9,230 stocks we're currently tracking in the US database, sorted VST descending. So we're bringing to the top of the list the stocks that have the strongest combination of relative value, relative safety, and relative timing. And we see on a down market day, the majority of these stocks pulled back with the market, which is why market timing or the market trend is such an important consideration, and the first consideration before we buy stocks. Of course, one down day doesn't create a trend, so particularly in weak economies, in successful investing, we like to confirm that we have positive earnings per share. In other words, profitable companies with positive earnings growth rate. Angie wrote a nice article last week about looking for growth rates that are in excess of the hurdle rate, the combined rates of inflation and interest in the current economy. We also prefer stocks that have continued positive sales growth, that they're still able to continue top-line growth even in a weak economic situation. We can easily add dividend performance to our analysis with these 5 columns: dividend, dividend yield, dividend safety, dividend growth, and YSG, or yield safety growth. Let's go down to NVIDIA where we have some of those fields populated. I'm going to right-click on it, and let's go to a full stock analysis report. This report can help you with your analysis, particularly if you are new to VectorVest. We go through in this report all of the default columns in the stock viewer. So there's the VST information, but if we scroll down, we'll get to the dividend information here as well. So our first indicator, DIV, is the dividend paid. VectorVest reports annual regular cash dividends as indicated by the most recent payments. Special distributions, one-time payments, stock dividends, etc. are not generally included. So this is the annual number for the dividend that they pay. We then calculate the yield of that regular dividend. Each yield reflects the dividend per share as a percentage of its price, of the stock price. And here's an important note. It's useful to compare dividend yield with earnings yield. If dividend yield is not significantly lower than the earnings yield, the dividend payment may be in jeopardy because the company would have to borrow to keep their investors happy to continue paying the dividend. And that takes us into dividend safety. Dividend safety is an indicator of the assurance that regular cash dividends will be declared and paid at current and/or higher rates for the foreseeable future. Stocks with dividend safety values above 75, it's on a scale of 0 to 99, typically have RS values, relative safety values, above 1, favorable safety, and earnings yield levels that are much higher than dividend yield. So some correlation between dividend safety and relative safety, which is why so many of our conservative searches or our income searches are high RS kinds of searches. Next is dividend growth. It's a forecasted annual growth rate of a company's dividend based on historical dividend payments and dividend predictability. It's a subtle yet important indicator of a company's financial performance. It also provides some insight into the board's outlook on the company's ability to increase earnings. And then finally, the master indicator for dividends, YSG. It's an indicator that combines dividend yield, safety, and growth into a single value and allows direct comparison of all dividend-paying stocks in the database. Stocks with the highest YSG values have the best combinations of dividend yield, safety, and growth. These are the stocks to buy for somewhat above current income and long-term growth. So let's return to the stock viewer now that we've defined terms. One of the ways we like to use the stock viewer, or any list of stocks for that matter, is a process of tagging those that meet the criteria we're interested in seeing. So these are all top VST stocks. All have high CI ratings above 1, except for FIHL. If we come over to the dividend information, then I can also look for any of these guys that have dividend safety greater than 75 as suggested in the analysis report. And then maybe limit from these that I selected those that have a yield greater than 1%. So I'm clicking off everything, leaving me with Miller Industries, MLR. So here's a stock I found within the top 20 VST stocks in the database that has solid fundamentals, persistently rising price, earnings growth rate well in excess of the hurdle rate, positive earnings growth, and positive sales growth. I would then want to go look at its graph, and using the VectorVest simple layout, we're looking for persistent price from bottom left to upper right, driven by earnings per share going bottom left to upper right. That's the VectorVest simple methodology. Of course, I can add parameters to my list. Going to the dividend analysis, I'll add safety and growth. So if I plot the dividend on the graph, we see that it has been rising over the past year, and it increased 7%. So here's a potential candidate for my portfolio that is really delivering across the board. Not only is price appreciating steadily, it's got solid fundamentals and has a dividend yield in excess of 1%. To make these candidates even easier to find, we can lean on the Unis Search tool to look through all 9,000 stocks instead of just the top 20. Jim Penna, our coach for retirement investing, maintains several portfolios in his coaching group, and his favorite dividend searches are prima donnas, steady eddies, blue chip dividend payers, and pale blue chips. And these would be a great place to start if you want to start investing for income. Of course, the details of his trading methods are available in his coaching group. But let's take a look at the searches and see what they're looking for. Back in the program, I'm going to click on the Unis Search tool. And within Unis Search, you have a directory of all the searches in the database, both by their group folder, or if you click the A to Z button, you'll see the individual searches where you see an alphanumeric sort of the searches by name. So for instance, if I wanted to find prima donnas, I just click into the list and type P on my keyboard, which will take me down to the P's. I can scroll down and look for the search, prima donnas. If I hover, notice it says group searches conservative. So it's in the conservative group folder. If I go back to the group folder and scroll back up, searches conservative group, prima donnas. So this search scans our database and looks for stocks that have RV less than 1, so upside potential less than the corporate bond. So these stocks are not necessarily going to be growth stocks. They'll have lower growth rates, as we often find in mature companies that have exited or finished their growth phase. Very high relative safety scores above 1.25, and they pay a dividend yielding something. And then we see this last 5 lines. You'll see this consistently in the database. We call this making them Derby ready. They have minimum price and volume requirements. Any stocks that meet these criteria, we're going to sort so that the best yielding come to the top of the list. So the power of the sort presents to us a bias of these candidates to find the best dividend yielding. If I click Run Search, based on last night's data, I'm going to compress the search parameters, scroll to the right a little bit, and we see RVs below 1, but solid RS values, weaker growth numbers, which would come with those low RVs. But if we scroll to the right and look at the dividend analysis, some nice safety scores and yields now well in excess of that 1% we saw with our first candidate, sorted dividend yield descending. Let's compare and contrast what Steady Eddies looks for in its search parameters. This search makes sure we have RS values well in excess of 1, above 1.25 in fact, pays a dividend yielding anything, and then sorts a combination of VST performance or stock performance and dividend performance. So the strongest combination of those two pieces of analysis, again, run the search. And let's scroll to the right. Now we see our RV values well above 1, so much better growth potential here. More buy ratings reflective of that upward price trend, and looking at the dividend analysis, many of these candidates yielding more than 1% with dividend safety scores that are very solid. And of course, you can customize the search with any parameters you would like to add. But let's continue looking at some of Jim's favorites. If we go to the searches retirement group, let's start with blue chip dividend payers. So these are blue chip stocks that pay a dividend. They're in the Dow Jones Industrials, Transports, Utilities, and the S&P 500 watch lists. So they're members of those indices. They have a yield in excess of 3%. They're in our DRIP list of both 10 to 24 and 25 plus years. So they've been paying consistently growing dividends over those time frames. And they have a safety score above 50. We're going to bring to the top of the list the strongest combination of earnings growth and dividend growth. Let's run the search. Let me scroll over a little so we can see that earnings performance. Here we see solid RV scores, everybody above 1. Relative safety scores, some dip below 1, but they're still pretty strong on safety. As a group, fewer buy ratings as of current market conditions. Earnings growth rates, a little bit lower. And if we keep scrolling to the right on the dividend analysis, higher yields with a little bit less safety, which makes sense because, as a rule of thumb, a little harder to maintain higher dividend yields over time. And then finally, pale blue chips back in the conservative folder. Here we're looking for high RS stocks with RS above 1.25, growth rates in excess of 10%, safety scores in excess of 50, dividend growth rates greater than 10%, and yielding more than 1%. We're going to bring to the top of the list the strongest combination of VST and YSG analysis. Let's run that search. And I'll scroll a little bit to the left so we can get that VST analysis. So again, solid RV scores. The majority of those above 1.3. Solid RS scores in upward price trends. Lots of buy ratings currently. Good CI scores here as well. Only elements below 1. Double-digit growth rates in excess of our hurdle rate. Scrolling to the right. Our dividend analysis. Yields all in excess of 1% with safety scores above 75 and, of course, above the search requirement of 50. So these are Jim's 4 favorite searches for his retirement investing group. Mirroring this back to successful investing, our next step, now that we're doing successful investor with a bias toward income, we would take a look at the graphs. So we're going to graph all of these guys. Same layout. We're on a 1-year chart. And let's clean it up here a little bit. We'll take off a dividend paid and its growth rate. And here's the thing I like to do is add the parameter of yield. And then without having to toggle back and forth, I can see what the current dividend is yielding. I'll take off the stop price to clean up the price graph here a little bit, but what we're looking for in Successful Investor, no matter what we use to generate the list of stocks, we're going to give preference to the stocks that have the best price action, best price pattern, bottom left, upper right, smoother the better, driven by earnings per share that's going bottom left, upper right, smoother the better. And it's simply a matter of scrolling through these stocks and picking out the best looking graph. And you saw the volatility of SIGI relative to the stocks we were looking at prior. We'd give preference to the stocks with less noise, less volatility. Once we've identified a candidate that we like, we'll set up our trade. With these income trades, we will typically want to trade them with a wider stop so that we stay in the trade longer so that we can collect that dividend. But if we start with something like the VectorVest stop price to set our initial line in the sand, we can now calculate the risk exposure of the trade based on the value of that looser stop and potentially further limit our risk using protective puts to keep us in the trade but manage risk. All of that's taught with Jim's coaching service, of course. So you can see combining earnings growth and dividend strategies is a powerful approach to set up your portfolio to reach your particular objectives for investing. And VectorVest makes that analysis easy. That'll wrap us up for tonight. Thanks for watching.